Yes, good afternoon, everyone. My name is Devon Drew, founder and CEO of DFD Partners, and thank you for joining today's webinar, Uncovering Investment Opportunities in the Global Music Industry. This webinar has been approved for 1 hour of continuing education credits for CFP, IWI, which is SEMA, CPWA, and RMA. And for those who hold the CFA designation, please keep a record of this and submit it and self-report for the submission. DFD Partners and DFD.ai is a patent pending tech platform that connects asset managers and wealth managers to their next clients. Our community members are asset managers like David, financial advisors like yourselves, and accredited investors. And we use your data and attributes and preferences to match you all accordingly. Think about us as like the match.com for the wealth tech community. One of our community members in our differentiated investment solutions is joining us today, David Scholhoff of the MUSQ ETF. So we're excited to have him. He comes to us with 25 years of experience in the global music industry and has made this into an investable instrument in the form of an ETF. However, before we get started, we would like to poll the audience. So if you guys can bear with me, you'll see the polling options, and I'll pull it up here in 1 second. And we will be launching it. So the first poll question for the audience, just to get a barometer, do you subscribe to any of the following paid music subscription services? The first is Spotify, the second, Apple Music, third, Prime Music, fourth, YouTube, and lastly, more than one of the above. Now, David, we appreciate you joining us here today. Just out of curiosity, which one do you subscribe to, and what do you think the audience is going to say here? What do you think the popular answer is going to be?
Well, I'm biased, Devon. I subscribe to all four, and that's because I need to see what's going on everywhere. But they're all a little bit different. Spotify's a first mover. I think they have a little better curation, but Apple Music is part of their ecosystem. So I don't know. I would probably say I think everybody here subscribes to at least one of these, and I would say most of them probably subscribe to Spotify. Say 80% Spotify, maybe 20% or 15% Apple Music, and 5 Prime.
Okay, so let's do this. Let's end the poll here, and let's share the results. So 44% of the audience subscribe to more than one of the above, with pretty much split between Spotify, Apple, and YouTube at 19%. And David, Prime Music's getting a goose egg here. Is this surprising to you, or what do you think about this?
No, well, first of all, being an Amazon Prime member may actually give you access to Prime Music, and so that may be a reason why they're not separately subscribing to Prime Music. That's the only reason I can think of. But look, Spotify, look, it's nice to see Spotify on par with YouTube. YouTube's definitely picking up, voters right behind Spotify. They're almost evenly matched. So they're all a little bit different. They all have the same library. They all have 150 million songs. Honestly, the difference between all three is really curation and your interface. How do you like using it? Are they recommending playlists to you? Some people like the seamless integration of Apple Music with the rest of Apple. YouTube, I think, skews a little bit younger, so they like access to all of the video content as well. But you're getting access to all the music. It's really about interface and curation. But it's nice to see. It's nice to see that almost half subscribe to more than one, and that doesn't surprise me. And that's part of the whole investment thesis today. Music is cheap. Music is cheap because even like with two services, right? Is basically what you're paying. What is HBO Go paying? They're paying like $15. So it's like music's cheap, and that's why people can afford to pay for two, even though there may be a lot of overlap.
Oh, no, thank you for that, and we appreciate that. So, we're happy to have you here. Like talking about differentiated investment solutions is one thing, but every once in a while there's a topic that is just polarizing, and I believe that is music. And so, if you could just, tell us a little about yourself, how you kind of got here, your background, and then the actual investment opportunity in front of us, because I'm sure a lot of people have heard, Justin Bieber selling his catalog for a boatload of money, right? But that's on the private market side. So to be able to access the global music industry in in an ETF wrapper, I'm sure a lot of people are very curious and interested about. And for the audience, we want to make this a dialogue, right? We want to make this entertaining and educational. So anytime there's any questions, there's a Q&A box on the bottom of the screen. And if you can't access that, there's also a chat feature. So we encourage you all to ask questions, and let's make this a dialogue. So David, I'll put it over to you.
Yeah, no, thank you, Devon. So nice to talk and meet everybody today. My name is David Schulhoff. I'm the founder and CEO of MUSQ. MUSQ is the first pure play music ETF on the market designed to give investors total exposure to the global music industry ecosystem. MUSQ is a convenient and portable way for you to have access to streaming, content, live music and ticketing, equipment and technology, and satellite and radio. By way of background, I've been in this industry for 25 years as an owner, operator, entrepreneur, investor in the space. Started off my career, trained as a lawyer, went to go work at Disney. I oversaw music for Miramax and Dimension Films, producing a lot of soundtracks for them. I went off and started my first company called Evergreen in 2005. I got backed by Lehman Brothers, and I bought 26 music publishing companies. We owned everything from Bill Monroe to Death Row. We had the best of hip hop, the best of bluegrass, the best of R&B. We owned songs by J.J. Cale, Michael Jackson, Teddy Riley, Two Live Crew, MC Hammer. I built a big company which I sold to KKR, and it became BMG Rights Management. And then over the last 5 years, I was the president of a public company called Live One, which owns Slacker Radio and Podcast One. Slacker Radio is in every Tesla car, and it's another streaming service. And so about a year ago, I was thinking about going back into publishing. And I think Devon pointed out there was just another deal done, whether it was Katy Perry or Bieber. I realized everybody was chasing after music publishing companies. And and I also examined the marketplace, and I realized that there were a lot of great public companies available in the music industry. But traditionally, music was very illiquid for investors. You had to be an LP at Blackstone, at KKR, or Apollo. So I basically designed an index. I thought about all the companies in the universe, and there were a lot. About half the companies were foreign companies, half the companies were domestic companies, and I wanted to create a convenient way for investors to get exposure to music. So upon examination of the fund, I realized that, and this was after reading a lot of reports from Goldman Sachs, like their Music in the Air report, and JP Morgan, that music was the most undermonetized, overlooked, underhyped media asset. And there was a reason for that. Music was cheap compared to all the other services today, whether it's Hulu or Spotify or HBO Go or Disney. For $11 a month, you get access to 150 million songs. So I realized that there was a growth opportunity in the music industry around streaming. And I also realized that with AI and blockchain, there was enormous opportunity in content and distribution. And then I looked at the landscape for live music, and I saw what was happening and who could wake up this summer at the breakfast table and not look at Taylor Swift in the newspaper. And it was a big summer for tours. Beyonce, Taylor Swift, Ed Sheeran. And so what I wanted to do was capture all this into a portable and convenient way to invest in the global music industry. So today, MUSQ is live. We went public on July 7th. We rang the bell on July 13th. It is a first to market ETF, giving investors a front row seat to this booming industry. To talk a little bit about the fund. So the way the ETF is set up, this is a passively managed fund. The eligibility requirements are such that all music companies have to generate more than 50% of their revenues from music, or they have to be a top 5 player in streaming, content, live music and ticketing, equipment and technology, and satellite and radio. No company can have a smaller market cap than $100 million, and no single company can be greater than 7%. No company that's smaller, so no company can be smaller than $100 million. It also has to have average daily trading liquidity of $500,000 a day. So this creates a very nice cross section of small cap, mid cap, and large cap companies. About 45% of the companies are domestic companies, and about 55% of the companies are international companies. And what I'm going to do right now is I'm going to share my screen and maybe pull up. Here is how. So these are the top music markets today. So obviously, the United States is driving about 45% of the revenue. Number two, in terms of size, is actually South Korea. So we have companies. We've, I think, 14 companies from South Korea in our fund. Third biggest market, I think, is Japan, and then China, and then followed by Western Europe, and we've got companies in Australia and in Brazil. This also gives just kind of the breadth on the recorded business. So the industry today, the industry has obviously come a long way since Thomas Edison invented the phonograph, and it's changed decades. Decades have gone by, and the way individuals consume music is very different today than decades ago. Today, it's really dominated by streaming, and streaming today accounts for 87% of all recorded revenues. Here is an example of where the recorded business was 20 years ago. It was when people were sort of buying CDs. It was at about $20 billion business. And here you can see a decline of physical sales and a rise of streaming. So today, we're at about a $30 billion business for recorded music. Goldman Sachs just came out with a report in their Music in the Air report, which, if you're interested in studying more about music, I urge you to read this report. Music is doubling to 151 billion by 2030. And there's a reason for that. Paid subscribers today are about 11% of the global population for cell phones. So there's about 8 billion people on the planet, right? So 7 billion have cell phones. Only 11% actually pay for a paid subscription service. Goldman Sachs predicts that number is going to jump to 1.2 billion by 2030. And those numbers are even conservative. I mean, it's hard to imagine a single person that has a cell phone that doesn't consume music in some way. So we believe that music today is incredibly undermonetized and is incredibly undervalued. Individuals today pay $11 for music, right, which is just a fraction of what some of the other services charge. And it's likely in the next 2 years that those services will wind up charging 10% more than they are today, and those numbers are going to continue to go up. So Goldman Sachs and JP Morgan both forecast a decade or double-digit growth from increased subscribers and ongoing price hikes and better monetization in developed markets and in the emerging markets. So the music industry today is really an exciting space to be in when you think about the opportunity and the growth in paid streaming, in the growth in content, and in the growth in live music.
Oh, David, that's been man, I don't know. I have it. I know it's a small cost, $11 a month spread across spread across 4 different platforms, 5 different platforms. All of a sudden, you're at $50 a month, and still, right, getting access to 150 songs is sounds like a bargain. But I'm curious, how correlated or sensitive is the music industry to the economic conditions? Like if we go into a recession, are you going to see people pull back from 4 to 5, because most of the audience, 44% of the audience said that they subscribe to more than one, right? So if we go into a recession, or if they're going to tougher times economically, do you anticipate seeing that go from having all four to only one? And if that is the case, who do you think is going to be the winner there?
Yeah. So, well, first, and it's interesting. You raise a couple interesting points. During tough times, like in a recession or tough times like the pandemic, streaming numbers went up. Actually, people consume music more, right? What they were first to cut were video services, the expensive video services. They didn't cut music services. In fact, they actually subscribed to more music services. So, music is cheap. Music, in our point of view, is recession proof from a standpoint, in good times and bad, you're listening to music. It's hard to, everybody consumes music in some way or another, whether it's a on an advertiser service or it's a paid subscription service. So it's a much cheaper alternative to video content. Also, be mindful that music consumers today, Devon, are actually spending 40% less than they did 20 years ago. 20 years ago, when they bought CDs for 15.98 or 16 or $18, they were spending a lot more than they are today. So I think consumers are accustomed to spending more for music. To spend $120 a year to have access to 150 million songs, and you have radio, which you don't pay. I mean, what a great way for 120 million, for $120 a year, right? You have access to basically everything. Think about how cheap that is, right? So I think what we recognize that, and that's why I think we, along with JP Morgan and Goldman Sachs, have continue to believe that music is incredibly under monetized.
So, I
So
mean,
yeah.
so why do you think that no one has come to market with an investment solution like music, like your ETF? Why are you kind of the first mover there?
Yeah, well, I don't think a lot of people understand the music business. I mean, I've been in this space for 25 years. I designed this in my head first with companies, and then I created index rules around it. Um, music also, like a lot of companies recently went public in the music space, right? They didn't historic. So Universal went public in the last couple of years. Warner's was public, then went private, then went public again. You have all these K-pop companies that went public. There are a lot of music companies today. And what I wanted to do was, organize this in a way and make it easy I wanted to give a diversified approach to investors. I wanted to make this portable and convenient. And I wanted to give them exposure to the whole global music ecosystem. It's also hard to invest in a lot of these foreign companies. You have to open up custody accounts. It's a pain to like go into a lot of these international markets. We have companies in this fund from Taiwan you've never heard of, like him. We have companies in Korea you've never heard of, like Genie Corp and Kakao, the two biggest streamers, along with Hybe and JYP and SM Entertainment, right? And you don't know about these companies. They're all locally traded. We make it easy and convenient for investors to get exposure to that. So, like I said, 45% of these companies are domestic, 55% are foreign. I really put a lot of thought into designing a product that was attractive. It's an exciting growth story. This fund captures all the growth and innovation around streaming, around content. We have all the public royalty trusts that are all buying these publishing catalogs that you alluded to before. So if you're an investor and you want to invest in publishing, we have all the publishing companies in our fund. We have Roundhill, we have Hypnosis, we have Reservoir Media, we have obviously all the big names: Warner Music Group, Universal, Sony. So that's sort of that's on the publishing, and we have all the labels, and then live music. Look at what's going on with live music. Like, I mean, I don't know if you saw, like in the last a couple days ago, Sphere opened up in Las Vegas. I don't know, Devon, did you see what they did there with U2? And did you see the venue that Madison Square Garden
Yeah,
opened up? And
it was incredible.
it's a state-of-the-art venue. It is simply incredible what MSG, they spent $2.3 billion. They built 4D technology, vibration, scent, temperature, wind. Like, it's a totally immersive space. They're going to open up another one in London. The stock on Sphere was up like 20% in the last couple days. We have all these companies in our fund with Live Nation and CTS Eventum, which is the equivalent to that in Europe. We have Vivid Seats, which is capturing all the growth around ticketing. Obviously, Madison Square Garden. So we have all these companies. Um, so we touched on streaming. We talked about content. We have all the labels, all the publishers. We talked about live music and ticketing. Let me talk about another exciting area, which is why I think this is such an exciting space to be in. Let's talk about AI and let's talk about blockchain. Okay. AI, Devon, is literally revolutionizing the industry right now in many ways. Okay. First of all, it's giving artists all the tools it's revolutionizing production and revolutionizing creativity. If you're a producer today, you have access to stems, you have access to voices, you can come up with all kinds of new ways to create new music and deliver, music to your fans. Okay. I don't know if you saw Paul McCartney just did an incredible album with John Lennon. It's like John Lennon was in the studio. It's just amazing what kind of stuff can be done, from a creative point of view. And then when you think about blockchain is putting the artist in touch with the super fan, right? And we know that the super fan will pay up to 3 times more than the ordinary fan. So the artist today can deliver live experiences directly to the fan. They can sell NFTs, they can sell tickets, and blockchain allows the artist to get paid directly in a direct payment rail. Right now, believe it or not, we're in a pretty antiquated system. When artists and songwriters get paid, they have to wait up to 9 months to receive their royalty checks from the venues that have to pay the local performing rights society, whether it's ASCAP or BMI or CSAC. So what blockchain is doing, it's setting up a direct payment rail between the artist and the songwriter and the user of that song. So we have, I think, 8 or 10 companies in our fund, from Yamaha, Roland, Vox, Dolby, Sonos. All these companies are producing all the audio equipment for artists. They're outfitting all the studios. They have all the tools that artists can use to take advantage of AI and produce more music. So this whole business today is on steroids today. When you look at the growth of streaming, which I just explained earlier, when you look at the excitement around live music and the excitement around blockchain and AI, this whole industry is being transformed, and that's why Goldman Sachs and J.P. Morgan and every other research analyst will look at, you see the growth potential around music. So and the last category was, let me pull up my screen here, which I think will be helpful. If I pull up, uh, so these are the categories which I think you can see here. Streaming platforms we talked about. We have 12 companies in our fund. Content and distribution, those are all the big labels like Universal and Warner's and Sony, but all the K-pop companies, all the companies like Avex in Japan, uh, companies all around Western Europe, Believe in France. Satellite and radio, we have all the companies in our fund. So these are companies like Sirius Radio, iHeart, Town Square Media, um, and Equipment and Tech are some of the other companies in our fund. So we roughly have 50 holdings in our fund. You know, these are some of the charts we actually just talked about here. Here we talked about all the smartphone penetration. See, look, this is J.P. Morgan. Let's look at what J.P. Morgan writes. This is not me. This is J.P. Morgan. We continue to believe that music represents the best content story in the history of media. Streaming and subscriptions transform the user experience. We expect a decade of double-digit growth driven by increased subscriber penetration, ongoing price rises, better monetization in developed markets, and first-time monetization in emerging markets, and licensing income from new applications such as health, fitness, and social media. This is JP Morgan just 9 months ago writing this report. I think it's just amazing. To your point, I think you answered the question. Why has nobody done this? Because music's been completely overlooked. It's the stepchild of like media. People have this view that music should be free, right? People grew up listening to music in cars, in radio. They have an attitude of that it should be free, and And I think we see now that it's not free, that there are, trillion-dollar businesses being built on the back of smartphones and companies like Google and Apple. And so music is finally getting their fair share. And we have a front row seat at the table right now for investors to capture all this growth and innovation. These are the index methodologies we talked about. Um, but that's that's sort of the investment thesis around what this is.
So, David, who is the net winner and if there's a net loser? Because I know just historically, normally the artists kind of take the short end of the stick, and the music labels and execs normally, normally get most of the profits. Going forward, do you think that's the similar type of model, or do you think that the artist will be properly compensated? And is this more of a net winner for the end investor, or the folks at the very top?
Well, it's a win certainly for the investor. Let's start there, right? This fund delivers returns that are like 4 times the GDP in the US. Okay. GDP is like 2%, 3%. This industry is growing at 9%. Okay. JP Morgan, I think, said 8%. Goldman Sachs said, I think, 10%. Streaming is growing at 11%, but it's roughly around 9%, right? So it's like 4 times GDP, right? So it's a good deal for investors. It's actually growing 5 or 6 times that in emerging markets because we're expecting double-digit growth with this industry overseas, right? As we have cell phone penetration, we have more paid services being adopted to whoever has a cell phone is eventually adopting some form of a music service. Okay. Who are the winners out of this? So the paid streamers are collecting more revenues, right? As more users sign up, right? And 87% of all recorded revenue today, right, is all from paid streaming. Okay. So when they collect that revenue, they pass through 70% of that, okay, to the content owners. That's the way it works. 30% is retained by the streamers, 70% is retained by the content owners. And then they pass through that money back to the artist and to the songwriter, depending on their deal. It's roughly half. Okay. So there's about $30 billion. That's the size of the recorded business today. About $21 billion gets sent to the content owners, right? Which is basically an oligopoly today. It's Universal, Warner's, and Sony, and then a bunch of independents, and they pass through the balance. So as the industry grows, the labels benefit, which means the artists benefit, which means the producers, the songwriters, and the publishers benefit. And as the industry grows, there's continued interest in seeing the artists that they're discovering on live tours, right? They're learning about artists. Like I just became a fan of Zach Bryan. I don't know if there's any Zach Bryan fans here, but I love Zach Bryan. And I just discovered him on Spotify. I went to go see a couple of his shows. Like I'm in love with the guy. Um, so live music's here to stay, and it's growing. And you see what kind of impact live music is having today, not just economically but culturally. Look at this summer. I mean, Taylor Swift and Beyonce delivered like $10 billion between them to the economy this summer. So who's benefiting? Everyone's benefiting, not just the artists. All the mom and pops, all the hotels went from 30% occupancy to 95% occupancy, right? These are very big cultural impacts and economic impacts, right, as a result of these tours. So they're delivering a lot of value, not just to the companies in this fund, but they're having overall cultural and economic impacts to the economy. So I think we're just scratching the surface here. I mean, Live Nation just doubled their output for tours for 2024 next summer. So it's an exciting time to be in this business. I've been doing it a long time, and it's an exciting time to have like all these really cool companies around the world. I mean, a lot of people don't know, but even companies in South Korea, they're very entrenched in the U.S. business today. Like company like Hybe, they bought Scooter Braun's company. Scooter managed he discovered Bieber, he discovered Ariana Grande, bought their management company. So they're managing a lot of our US acts. Um, They bought Quality Control. They manage Migos and Little Baby, acts like people may or may not be familiar with, but like these are big hip hop acts. So they're very entrenched in the US business today. So music today is global. It's streamed globally. Acts are global. So you take big K-pop acts like BTS, they're like huge stars around the world. And it's important to capture all this growth and innovation. And that's what we're looking to do.
There was a question that came in.
Yeah.
I know we spoke about hip hop. So the question is, hip hop is a popular form of music. Are there any investment opportunities in the equipment that hip hop slash rap artists use to make their music?
Yeah, that's a great question. Thanks, Thomas, for sharing that. Yeah, so if you look in our fund, just go to musq.com. And if you pull up our holdings, you'll see. So we have like 10 holdings in our fund. We have Yamaha, we have Dolby, we've got Vox, we have Focusrite. All these companies produce, all types of audio equipment, from turntables to, all kinds of production gear, to create music. So, and you're right, it is a popular form of music. When you look today, pop R&B and hip hop have really been driving, a lot of the revenues. I'd say, rock music is, while it was may have been big in the 80s and early 90s, has kind of taken a back seat. It's obviously big in terms of catalog, but like frontline product today is, and I love hip hop, by the way. I used to own Tupac Shakur's catalog. I bought Death Row. I mean, I'm actually a pretty big hip hop person myself, and I see the total value in that. And it's a totally amazing art form, and I just love it too. But anyway, to answer your question, Thomas, yeah, of course, like look under technology, and all these companies are giving the artist the tools to create samples and stuff like that. That's what AI is, by the way. AI is all about getting stems. AI is all about using technology to access equipment, or to access the stems and the samples from songs to create derivative works. So you're going to see a lot more derivative works get created, and you're going to see a lot of samples get created. And that means more monetization to publishers and producers.
No, that's great. So with that said, let's take a little pause here, and let's go to our second poll question. And the second poll question, which is being launched now. So we know, David, we heard you're very passionate about it. We believe that, investing in music is a compelling investment opportunity. But let's actually ask the audience and see what they said. So the question is, do you feel that music is a compelling investment opportunity? Yes or no? Right? And I'd be curious. I know you're in it all day, every day. You've been in
Yeah.
it for 25 years. But
Yeah.
let's take your hat off as the lawyer, the entrepreneur, the investor, and let's put a fiduciary of clients' assets in here, right? So with that hat on, what do you think that answer would be for the audience?
Yeah, well, I'd have to answer yes, and it's not because I'm biased. It's because music is simply too big to ignore. I mean, it's growing. You're exposed to music every day. Like I said, without knowing anything about the music industry, you pick up a newspaper, you see what's going on with tours, you see what's going on with streaming, you see what's going on with content, you see what's going on. There's music everywhere. So all of the macro indicators would lead one to believe that it's compelling, even if they don't understand the real nuts and bolts of the business.
Okay, let's end the poll now and let's share results. So 86% of the audience said yes, music is a compelling investment opportunity. 14% said no, it is not a compelling opportunity. So for those 14% of the people, David, what do you think that they could be looking as a potential risk, to make it not a compelling investment opportunity for their clients?
Yeah. So why would an investor, well, they may not view it as, they may view AI as a threat. Okay. So AI could be a reason Clearly, market saturation and piracy are two threats to the business. I mean, that's just a tiny piece of it, but AI is something that we have to face, and every other industry around the universe has to face the impact of AI, the impact on labor. But AI is not going to replace an artist from creating a story, from coming up with an album. They're going to be tools that are going to help the artist, but we're not going to live in a universe where we're only listening to AI generated music, right? Because nobody has stories to tell, nobody can go out and tour. So I don't see that as a real risk. Um, no, look, I think people remember kind of Napster, what happened 20 years ago. They remember when the industry was kind of turned upside down. But remember, when Napster happened, we that came with the that came then came the iTunes store, then came Spotify. So we came out of it, as I showed you in the chart. But I think piracy, I think people who are negative on it just they don't see it. Again, historically, it's been very, some people view it as something they should have for free because of radio, right? Radio for a long time, that's what actually covered the cost of music, right? So you didn't have to pay for anything. So I think a lot of people don't think they need to pay for music today. And that's my point. That's why it's very under monetized, because historically it hasn't been. But hey, for those of you that don't think music's a good investment opportunity, I'm here to talk to you and see if I can explain it to you a little bit more and see if I can convert you. For the 84% that think music is compelling, right on. It's an exciting space to be in. Look at what's going on around the world today. We capture all that growth, all that innovation in this fund. This is just the beginning. We are really at a really great inflection point in the music industry right now. It is really on steroids, and it's about to take off. And I urge anybody who is interested in a deeper dive. So I wrote two white papers. One is at the musicetf.com website. One is on our index website, musqindex.com. There's the Music in the Air report. Her name is Lisa Yang. She is the head music research analyst at Goldman Sachs. I urge you to go and download the report. There's also a podcast that she did with Tim Ingram on music business worldwide. Go check this out. Listen to, she is so smart. She has all the data points that you're going to want to listen to about the industry and where it's going. And I just didn't even do her justice today. I just talked 5 or 10%, but listen to her and read that Music in the Air report. Luminate also has another great report. We have 4 trillion streams already in this world in the first half of 2024. That we're moving into a total digitization in the streaming economy. That Luminate report is really exciting. And then if you want the RIAA, the Recording Industry Association of America, just came out with their report showing that the industry is growing at the recorded business is growing at 9% this year, 87% of that money coming from streaming. That's a really good report too. So, but look on our website. We have the white paper at musq.com. We have the fact sheet. We have the investment case, and we have a pitch deck. There's a lot of collateral there. Just to be educated about the music industry and all the different components, and we highlight all the 50 companies in our fund.
Thank you for that. So what would you consider, as this becomes more popular, there's going to be, there's going to be people that try to duplicate or replicate kind of what you're doing, whether it's an ETF, a mutual fund, a separate account, an interval fund, a private fund. What is your, what is your, I guess, moat that you've built around this and your true differentiator, if folks try to come in and duplicate what you've done with the music ETF.
Yeah, well, first, I guess imitation is flattery, right? So if people are going to try and copycat this, I guess they can if they want to. We are a first mover. I've been in the industry for 25 years. There's 4,000 ETF managers out there. I don't think anybody understands the companies like I do. I don't think that they can educate their investment audience like I can. And so I bring a lot of experience to creating this. I thoughtfully created this index. When you look at the rules in our prospectus and what we created, I created a very compelling investment product, and so we thoughtfully crafted the index. We back tested it. The back test of the index outperforms the S&P and the MSCI in some months and in some years, and so it's a very compelling investment product. Um, and and look, there's other other funds are out there that call themselves, music or music and media. We're the only pure play music ETF. This is really the only one that has a pure play dynamic to the music industry. And I'm proud that I brought this to market. I put a lot of time and thought into developing this based on my experience. I know the CEOs at half the companies. We're going to be doing an MUSQ conference soon. We're going to invite all the CEOs out from all these different companies. They're going to come and talk about the industry, talk about the companies. I'd love to invite everybody on this webinar to that. And so look, I love the product, and my goal is just to evangelize the product and get it out there. And I just want people invested in music. Honestly, you know what, Devon, this is actually bigger than me. I got to tell you, I'm really proud of this thing. I just want this to be big for everybody. At some point, I even envision giving away, whatever participations in this fund, some of them to charity, music charities. I want it to feed on itself as it grows. I want it to give back, believe it or not. I want it to create something that could actually live and be big, and hopefully this becomes like the triple Qs of music one day.
I might steal that to triple Q's of music. I might steal that for you. So question around the actual product and availability.
Hmm.
So the audience that you're talking to right now, as you know, is a predominantly financial advisor
Hmm.
community, registered investment
Yeah.
advisors, folks that work at private banks, wirehouses like Merrill Morgan, UBS, Wells, independents like LPL, Raymond James,
Yeah.
RBC. Where can folks that are interested and believe in this opportunity invest in music?
Yeah, well, so today we have I think close to 13 or 14 million dollars in the fund. So you can go to our website, learn more about it, then you could trade, you call your local broker. I'm already in conversations with some folks at LPL and Stifel and Morgan Stanley. So our goal is we'd love to be picked up on from on all the wirehouses. I know they have certain AUM, thresholds to meet, but we're on a good trajectory. I mean, yeah, we've had, close to whatever it is, 13, 14 million in the fund in just 2 months. And so there's clearly a retail appetite. And then, if the for the R I think the RIAs I think you can invest in it. I don't know if you can solicit, it may not be able to be solicited to your clients. So I don't know what the rules are is exactly around. I think there are some waivers but this fund is growing. It will be at a place where you can distribute it to all your clients on your platforms. And until then, you can just trade it. You can call a broker and you can buy shares in the fund. We have, 510,000 units have already been created in the fund.
Gotcha. Yeah. So I believe if you're cleared through like a Schwab, Fidelity, or
Yeah.
NFS,
Yeah.
it would be available in TF, which is no transaction fees on those platforms. So you should be good there. So most, if not all, registered investment advisors would be able to access it through there. So that makes a lot of sense. And then there is a question around how is the portfolio constructed and what are the eligibility requirements? And I think you touched a little bit
Yeah.
on this a little earlier, but if you could speak a little bit more to
Yeah.
that,
No.
that'd be great.
Yeah. No, I'm happy to. I'm actually I'm going to share my screen, and I'm going to, so the eligibility requirements are, okay, so companies have to have a core business interest in the global music industry. They have to derive at least 50% of their annual revenues from the global music industry, or they have to be a top five player, or have 10% global market share in one of these subsegments: streaming, content, live music, okay. And they have to have a minimum market cap of 100 million, or they have to have minimum trading volume of 500,000 a day, and if it's between 2 to 500,000, they actually get a half weight. So for the top companies in our fund, so Apple, Amazon, and Google, for instance, are in our fund, and that's because after Spotify, they are a top five player in music streaming. and they also control 10% of the global market share in music streaming. So we had to include the big names, but they're capped at 7%, right? And then all the other companies are market cap weighted, with no company being smaller than $100 million. The fund gets rebalanced quarterly. And so if you look on our website, if some of the names actually are above 7%, they'll just get at the time of rebalance, they'll be pushed down. So no company can be less than or can be greater than 7%. So this winds up being a really exciting music and technology fund, with basically Apple, Amazon, and Google having 21%, and 79% of the fund is all music companies scattered around the world.
Thank you for that. So I'd be curious, where do you think this product fits, right? Would it be a 2 to 3% allocation out of like your S&P exposure, or would advisors have this in kind of the alternative landscape? Like, have you come across that at all?
Yeah, no, it's a good question. So I don't think this should be 10% of anyone's portfolio, right? But it is too big to ignore. It's too exciting to ignore. It's a growth investment, and I think it should be 1 to 3% of a portfolio, of an individual's portfolio today. There may be some overlap, and so the investors will need to look. Probably they'll see that Apple, Amazon, and Google are the overlap, but the other 47 companies in the fund, now there's 48 at the time of rebalance. So the other 45 companies in the fund, they probably don't have. So they'll need to do their own weighted analysis to see, how that would match up against the other holdings in their fund. But yeah, anywhere from 2 to 3% is what we think is the right allocation for MUSQ into an individual's portfolio.
Gotcha. Thank you. And what I would love to do now, and I'm starting to see some questions come in, is formally open up the webinar for a Q&A, and we'll take the next, 10 to 13 minutes to ask a Q&A. So for the audience, if you can go down to the bottom of the screen to the Q&A, this is our opportunity to ask, as David, questions that we haven't touched on. And David, the first question I have for you is, from a sustainability standpoint, do you think artists are getting their fair share from streaming services?
Yeah, like I pointed out, they're getting 70% and that's pretty good. That's pretty high. The RIAA works on behalf of the artists, and it is an oligopoly. And so every 3, 4 years, the rates get negotiated, renegotiated. And I'll tell you, by the way, and Albert, thank you for your question. Um, Up until recently, by the way, all streams were considered equal, right? And so as a result, what happened was you had content farming and you had streaming fraud and manipulation. Now artists are actually getting paid more. If the stream is more than a minute and it's from a real artist, from a real label, they're actually getting even more revenue than they did historically per stream, because historically it was all streams equal. So they'll wind up getting more than they did historically. And like I said, when these streaming services generate more money, they're paying out 70% to the labels, and the labels are then paying out. The real question is, what is the deal between the artist and their label? Because historically, they may have given up 50% of all digital revenue, now known or hereafter devised. That's the language. Like if you were, I don't want to go into too much detail, but if you signed a contract like 25 years ago, you gave away upside for new technologies. And if this would fall into a new technology, and you may be giving up 50%. So the real question is, can that artist renegotiate with the label? Not, is the streamer paying enough to the label and the publisher? So hopefully that answers that question.
No, thank you for that. That kind of leads me to, that's pretty interesting. So is there separate deals? So if I was an artist, I would have something done with Spotify, and then I have a separate deal with my record label.
So when you're an artist, right? First of all, if you signed a contract with the label, you're signing an exclusive contract with that label, right? They're putting up money to put you in the studio, to record, they're releasing your product in the market, right? It's a contract. And so they negotiate that deal with the streamer. If you're an independent artist, you may do a direct deal with a streamer. So it really depends on who has rights, right? You may control your own rights, or you may have given up some of those rights for the benefit of getting, touring money and money to go into the studio.
Gotcha. Okay. So there's a question from Kathleen, and thank you for the question. How do they get revenue from streaming?
Well, that's what I said. So they actually collect, so that paid revenue that comes in gets paid back to the artist. And the streams are calculated. They're basically 0.003 to 0.005 cents per stream, right? So they calculate the number, but it's even more now if you're an artist for the reasons I said. So they calculate the number of streams. They calculate the total number of streams on a given month. They figure out who the artists are that got those streams, and then they pay out 70% of their revenue to the labels.
Gotcha. And then we have a question from
Mhm.
Thomas. Bear with me. So while I think it's a multiple questions in here. So while this ETF is new, and the goal now is obviously directionally up. I could see in the future options change arising around these types of ETFs.
Mm.
How could a CFO within an industry use the ETF to hedge against inherent types of risk plaguing aspects of the music industry now? Um, for an example, in other industries that are, say, petroleum dependent, they can hedge using options against rising and falling fuel prices. What would an analogy be in the music industry?
Yeah, it's a good question, Thomas. I mean, I guess you could be long the industry and short AI, right? Or you could be long AI and short the industry. And if AI was really a big threat in the industry, you could be long in NVIDIA and you could short the music industry. If you thought, I guess that's one way you could probably look. The threats to the music industry have always been piracy. And so if you thought that technology was such a threat to piracy, right, then you would be long on any company that would steal music, right? You would be long on any company that would create deep fakes, right? So you would be long on NVIDIA, you'd be long on, I don't know, any technology that ripped voices and could scam artists, right? You'd be long on those and you would short the industry, or vice versa. If you thought the industry was really strong and united, and it has always been united, and we came through a lot of like historical copyright battles and we came out ahead, then you'd be long the industry and you'd short those other companies. I would be long the music and I would be short uh, some of these other companies. I wouldn't short the music industry, but it's an interesting thing. You could use it as a hedge, I guess, if you liked.
Gotcha. Okay, next question. And I think this would should be music, I'm not sure, but does music turn off cash flow? And what is the annual estimate?
When you say does our fund turn off cash flow? I'm not sure I understand the question. Are we paying a dividend? We do pay a dividend at the
Yeah, I
end of the
think
year.
that might be what this question is referring to. Um, and if you want to further ask another question in the Q&A to clarifying, that'd be great. But I think the attendee is trying to ask if music pays any cash flow, or what is the
Well, like I
annual
said, we
estimate?
well, like I
Yeah.
said, we are paying a dividend. It'll get calculated at the end of the year. Several companies in our fund pay a dividend. So Reservoir, Hypnosis, some of the royalty trusts pay dividends, and we calculate those at the end of the. So you do get a dividend. The short answer is if you invest in MUSQ, you get a dividend. It'll be calculated and paid annually.
Gotcha. Thank you for that, and hopefully we answer that question for the person that asked. And we do have a question from Michael. Which music genres dominate market share, and are there other genres poised to gain market share?
Yeah, thanks, Michael, for your question. So hip hop and R&B today dominate market share. So you look at Drake, you look at SZA, you look at you know Lizzo. The list is. My daughter would be so embarrassed if I didn't have all these names on the tip of my tongue right now. But if you look at TikTok, they're all very pop R&B driven and a lot of rap, right? And so Rock is really a distant third, and I'd say country music is probably number two. A lot of great country is out there. Country performs well for a long time too. So, Luke Bryan and Chris Stapleton and Zach Bryan, and these songs get performed on radio a lot. They generate a lot of income. But in terms of streaming, when you look at the big streaming numbers today, from the Weekend or Drake, it's all like pop hip hop. It's all hip hop.
Gotcha. Okay. And was there Luke Combs? Was it Luke
Well,
Combs or
he's
Luke Bryant?
no,
Is that another one?
those are two guys, two separate guys. Luke Bryan is great. He just sang Tracy Chapman's song, "Fast Car." If you remember, that's Luke Bryan, which is a great
Gotcha.
song. Which is a great song. But two different artists. Zach Bryan and Luke Bryan are two different people.
Gotcha. Okay, thank you for that, and thank you, Michael, for asking the question. My question would be around with the couple minutes we have left, public markets versus private markets, right? I mean,
Mhm.
when you look at MOIC and you look at IRR, and you look at the liquidity risk of holding some of these private investments for 7 to 10 years, right? However, from a demographic standpoint and a generational perspective, you're seeing millennials and Gen Zs, specifically millennials, invest 3 times as much on the private side as the public side. Do you see any of those factors as a, plus or minus when it comes to the music industry? Because like you said, I don't know the demographic of people that are buying, the Justin Bieber catalog, but knowing that, but knowing that the trend is that it's going younger for people that are investing in private markets. Do you view that as as one competitor, right? If we talk about from a public to private side.
Here's what I can tell you. As a private investor, for you to get access to any of these big deals, you need to show net worth at, 2 million, 4 million, $5 million. If you want to be
Okay.
at LP, at Providence Equity Partners, at Apollo, at
Okay.
Blackstone, at KKR, you can't get it. And that's, by the way, one of the reasons I did this was to target a younger audience too, so they could invest 1,000 or whatever, $10,000 or 25,000 or 50,000. So they have access to music now. They couldn't really do that, right?
Right.
Even right, these private deals, they're always asking you, what's your net worth? They don't have the net worth. If they, they really, I mean, I don't know how many Gen Zs are worth $5 million, right? If there are a lot of them, God bless them, keep doing what you're doing. But I don't think a lot of kids out of college are worth $5 million, right? And so for them to invest in music is hard. You don't have the balance sheet to go, and you're not going to put up your money to wait 7 or 8 years to get paid back. That's the point. I wanted to create something diversified, something convenient, and something completely liquid. Music historically has always been an illiquid investment for investors, and you had to show a balance sheet. Now it's democratized the investment, it's investing for the masses, it's diversified, and it's completely liquid. And I think you're getting better returns too, by the way. If you're getting returns in line or in excess of the S&P, that's better than some of the IRRs that some of these private equity firms have delivered. Oh, I think I lost you there, Devon. Is that me or you?
Sorry about that. I had it on mute.
Yeah.
Last question. What's the minimum to invest in MUSQ? And then is there a maximum to invest? That's a great question. Maximum.
There's no minimum to invest. One share is I think about $24. So you can buy one share if you want. And there's no maximum. I mean, this fund has the capacity to take on, you know, very large amounts of capital. It's got, a lot of the companies are very liquid. There's liquidity requirements. So you can invest anything you want, any amount that you want. And like I said, you could buy one share if you want.
Let's start at 10 million and see where it goes from there.
Yeah, but listen, we don't. Yeah, we want people to invest. I also think now's a really good time to invest. If you take a look, like the market's been obviously corrected a little bit. The Fed announced that rates are going to be higher a bit longer. A lot of the technology stocks have been corrected. So some of the companies in our fund, they're not nearly as down as other tech, but some of the companies in our fund are down just because of the overall macro pressure from the Fed. And so if you take a look at the fund, it's actually a really good time to be buying into it right now.
Well, thank you, David. I really appreciate you taking your time to educate us on yourself and MUSQ. For the audience, you will be having a survey for those of you who want continuing education credits for CFP and the IWI. There's going to be a survey that pops up in your browser directly after this, and another one within 24 hours. So please fill out the survey. It'll help us and it'll help David as we go on to see folks that are interested, and also if you felt that the webinar was useful. So on behalf of myself, Devon Drew with DFD Partners and DFD.ai, the Match.com of Wealth Tech, and for David Shuloff, we really appreciate we really appreciate your time, and see you the next time.
Great. Thank you, everybody. Thank you, Devon.